What do you feel about somebody that is, because I've seen this several times in my career too, where the markets did extremely well for the last several years, and maybe they're a DIY person, and their level of confidence is extremely high, thinking, but their basis is because of the way the market's been running, right? How do you approach a conversation about that of just how to look at things differently to make sure that they're taking the right safeguards to not lose a lot of money if the market turns down?
There's more risk to somebody of that mindset than people who are too anxious about the market or anxious about the market. The way we approach that and invest and build our plans is through setting up systematic rebalancing. And what we mean by that is aligning from their planning what is the target asset allocation that we want to have. So let's say it's 80% stock and 20% bond. We invest, if we're investing, we're at 80% stock, 20% bond. As soon as that happens, that very day, the market is moving and they will not be at 80% anymore from a stock portfolio. And so over time, if markets appreciate in the scenario you just described, and like we've been living through here for several years where markets have done very well, that 80% is going to climb, which is a good thing. We now have more assets because the portfolio has gone up. Over time, what happens is that 80% creeps up and it's at 82, 83, 84, 85. At some point, if never kept in check, that 80% target, which is aggressive to begin with, but it has a balance of bonds. If we let that run indefinitely, whether it's for maybe overconfidence in the market, maybe it's concerns about realizing capital gains and paying taxes, if we never make that adjustment, at some point that 80% becomes 90%, 95%, and starts approaching 100%, which would be great market growth. But the concern is you're now left far more exposed than you were as part of the planning. Yeah. And so rebalancing is critical. I think many investors are aware of it. The key that comes down to the systematic part, that's really the key, is it's not taking subjectivity into account and saying, well, the market's done well, you're at 86%. But boy, the economy's humming, let's let it ride. It's being very diligent and specific to say, when we cross our threshold of what we're comfortable with, relative to your target, not relative to the market, but your plan, we're going to rebalance for you. Right. And we're going to do that over and over again. And so being specific about how to do that. And what that does is it provides the opportunity to capture gains when valuations are higher. Realize those gains. There may be tax implications to that. We're always mindful of that. We want to be strategic, but we don't want to let taxes control the investment experience entirely. Right. And so taking advantage of strong market, rebalancing, taking some of those chips off the table, if you will, and moving them into more conservative assets is critical to prevent what you described. And then the opposite being true. If markets have downturns, taking advantage of lower valuations and moving some of that bonds or cash into the market systematically. Again, we're not waiting and trying to say, market's down, we're going to wait until we hit the bottom. You don't know that it was the bottom until long after the recovery.
When's the bottom? When is the top?
Exactly.
That's a great question. I mean, it's like everyone thinks they know what to do, but then when you ask those hard questions, it's like, well, where is the bottom? When do you stop? When is the top? When do you decide to put your parachute on?
Is easy, but there's no way to know when the top or the bottom is, and so it's sticking to a rules-based.
You know when you've waited too long.
That you know. That's right. That's right.
For those that are listening right now, it's like if you did have interest in meeting one of us and having these deeper conversations, it's pretty easy to do, right? We just book a discovery call. We book a call, just have a quick conversation over the phone or even a meeting in person and talk about these things. I mean, there's no commitment and there's definitely no sales pressure here ever. It's a professional perspective. You just see what we can do and if maybe we're a good fit. So I think that's a great opportunity for anyone out there right now. If they're thinking about it, definitely contact Plancorp.
Absolutely. We'd love to talk.
We'd love to talk.